Hey guys, good afternoon. It is 5:45 p.m. on Wednesday, May 15th, 2019. Hope everybody's doing well. Sorry, first video in several days. Hasn't been a lot on the trading calendar this week prior to probably the best event of the week, which will be tonight. And and that's going to be Australian dollar employment news, employment change, unemployment rate, which comes out at 9:30 p.m. New York time, so just under 4 hours from now. So we'll just take a quick look at the headlines. But the thing I wanted to say, guys, is if you watch the video I made on the Australian dollar rate decision from last week, and then you look at the statement that the Bank of Australia made in their policy decision, they mentioned that inflation is has been lower, of course, than they would like, but that their main piece of news that they would be looking for going forward to decide whether they want to cut rates or leave them the same at their next meeting, it was going to be the labor market. So this is the first significant piece of risk event data that we are going to get that is going to have a direct impact. So I expect that this will cause some volatility and a potentially good trading situation here tonight. Because again, at that meeting, the RBA pretty much told the market what's important to them. And whatever is important to the central bank is where traders are going to focus in terms of how important they weigh it. It doesn't always matter that if it's on the economic calendar as, a piece of, red data or whatever, that it's going to be, basically it's going to have more to do with how the market views that. So if you go on forexlive.com right now, you'll find this post pretty short way down the blog. And again, guys, this is that if you want to know what's going on fundamentally in the market and you don't want to spend money subscribing to other services like Forex Source, which I subscribe to, you can get something like forexlive.com, which is free and it's pretty much real time, and there's some great analysis on here. And you're going to get pretty tuned in just by regularly checking into this site during the day and during the week. So anyways, here's what they're expecting. So employment change expecting 15,000 at a prior 25.7. Unemployment rate is expected to stay the same. Full-time employment change to prior was 48,000. There's no part-time, again, was 22,000. And participation rate is expected to stay the same. And so then there's a couple of investment houses that have their analysis, and there's a little bit there's a little bit of difference here. You get Westpac expecting things in terms of the job numbers to be lower. CBA is expecting it to be a little bit higher. But this one here from Macquarie, that the RBA appears to have lowered the hurdle for a rate cut to one where policy easing could be delivered if unemployment rate doesn't decline in the coming months. And so they're expecting to come in basically as expected. And this is the thing, guys. It's going to be one of those things, again, where you're just going to have to let the numbers come out. And, you're going to have the headline number, of course, the unemployment number, this one right here. Okay, and then you're going to have the unemployment rate. These will be the two headline pieces of data right here. Okay, this will be the two headline pieces. But then you're going to really want to see these numbers in here. What's the full-time versus part-time? What's the participation rate? Because that's going to be, digging down. So you'll have, of course, an immediate reaction based on the employment change headline number and the unemployment rate. And, if there's a big beat or a big miss, then there's going to be an immediate reaction. If it comes out as expected, it comes in around that 15,000, unemployment rate comes in around 5%, then there's probably going to be a little bit of a delay potentially in the market getting a direction, because then it's going to come down to, full-time versus part-time, participation rate, and the market, traders are going to have to kind of, digest how they interpret those numbers. So, like I said, I think if there's a big miss or a big beat, that's going to have a much more clear direction. But even that, I mean, you could have a big beat, maybe the employment number is at 20,000, but more of that was part-time jobs, or the unemployment rate ticks up anyways, or the participation rate. So you could have a lot of, again, like I've mentioned this in other videos, guys, that if you have conflicting pieces of data, one positive, one negative, or three positive and two negative, then that makes it a lot more muddy in terms of how you want to trade it, because there's no one direction, and traders are going to have different views of how to interpret the data. So we're going to have to let it just see how it comes out. And again, if the headline numbers are way different than what's expected, then there's going to be a natural reaction. If they come out pretty much in line, then be prepared for kind of some volatility and whipsawing, or maybe not a lot of reaction at all, at least initially, and then the market will have to get some footing. And also be careful about the second view. A lot of times you see things change. They go one way during the Asian session when this news comes out, and London reopens the next morning. You could see it go the other way, because it's just different competing forces in the market. And also because, again, liquidity and volume's a lot lower during the Asian session. So unless there's, a really compelling reason to go one way or another, be prepared for kind of that second look to potentially happen when the London market reopens on Thursday morning. So I'm not going to really spend a lot of time on the charts, guys. I mean, this right here is the Aussie Swiss. And I had labeled this 5 waves down, but I don't think this wave 5 is over yet. This looks like maybe just the beginning potentially of wave 5, or maybe the end of wave 4. So I could either see this, kind of rallying back up, at least initially. This is a 2-hour chart, so it's not a very long time frame, but you can, maybe see a little rally up and then turn down, or we could just keep going down. So, but I do think that the Aussie Swiss is set to go down again. You can see the Aussie Canadian, this is the 4-hour chart, has just continued to fall, and just kind of a little bit of consolidation right now. Aussie Kiwi, and this is a demo account, guys, so that's why those of you that were watching some of my demo trade videos, this is just a demo account, so these are not necessarily any live trades that I have. But anyways, Aussie Kiwi, on the other hand, I think also potentially looks like it wants to go down again, although I do have a long, but obviously, again, it's a demo, so I don't really care. But and I've had this trade on for a while. So, 1, 2, 3, 4, 5, potentially go down again on the 4-hour chart. The Aussie Yen, same thing, clearly in a downtrend that it doesn't appear to be over yet. And Aussie dollar's been hit pretty hard, but the dollar's been pretty strong as usual. Euro Aussie, just kind of going the other way. The Euro Aussie's been up. There's the daily chart. And again, some consolidation again today. The euro was kind of up and down today, so a little bit tricky there. And pound Aussie. I mean, this is really all being driven by the pound. Really hard to say anything with the pound because of Brexit. So I really haven't been focusing too much on pound pairs because of that. So I would probably stick to the Aussie and all the Aussie pairs, and maybe Euro Aussie, Aussie Kiwi. So anyways, guys, we'll see what happens here. The Aussie has been hit hard, so who knows? I mean, maybe these downtrends are really getting thin and old because it's been going down forever. It seems like, although it really hasn't been that long. Go to the daily chart of the Aussie Swiss. I mean, we had this nice move up, and then we've completely reversed that, and so and kind of reassumed this downtrend. And so, but I don't think it's over yet. So from a technical standpoint, I think I think the Aussie is still set to go down more, but we could see a short-term rally. And again, this is where I talk about either conflicting data or that second look, what happens during the Asian session, then what happens, is there follow through in the London session, or do things kind of, revert back to the to what was happening before. So it's going to be interesting, guys. I think, from a risk event, this is probably the best piece of risk event this week that's available, because I'm looking at the calendar for the rest of the week. There's really nothing else. There's nothing tomorrow. We do have Australian elections on Friday, but that's going to be probably not really maybe affecting too much. It's going to be, but potentially next week, depending how those elections come out, could be some effect on the market. But really, across all the other numbers, what's on the economic calendar the rest of the week, there's really nothing tomorrow to really speak of, and there's nothing on Friday. So from a fundamental scheduled risk event, this is it. This is the highlight one for the week. But again, guys, I can't stress enough that the RBA is going to be really tuned into employment. So no matter how these numbers come out, they are going to have an influence on where the RBA goes forward with with their bank rates. And if these numbers disappoint, then that's going to really set the Aussie up for a continued pressure down, because it's going to really seal the deal potentially for a rate cut. Now, if it comes out really strong, then the Aussie might be supported in the anticipation that, hey, they're not going to cut rates. I mean, they're not going to raise rates, but they're not going to cut either. So the Aussie could get a bounce on that. But still, I'm not sure how long that actually goes on for. But at least in the shorter term, you could get a nice bounce off of numbers that beat expectations. But I think a big miss is going to be probably a better trade to the downside. Although again, these downtrends in the Aussie could be getting a little old, and we could see some just burnout and bottoming, that it's already been priced in, maybe that the RBA is going to cut, or priced in that the employment numbers aren't going to be great. So we'll see how it goes, guys. I'll try to make a follow-up afterwards, but I'll be watching this one really close. And I do think that, like I said, this is has the impact to be a decent one way or another, depending how this comes out. So again, technically on the charts, it does look like we are in strong downtrends, but are they coming to an end, or are we going to maybe just see a short-term bounce and then they resume? I think that's more likely if the data is negative. If the data is positive, we could see a longer-term sentiment bounce and have the Aussie go up. But in the end, it might not be a sustained move, because until if and when inflation numbers begin to get better out of Australia too. So we'll see how it goes, guys. But keep an eye on this one tonight. And if you're in any Aussie trades right now, going into this news, I'd be a little bit cautious. Protect yourself, because there could be some really big moves coming out of this. And of course, if you're on the right side of it, it's good, but we could also see that quickly reverse and go back the other way. And so just be careful. I'm not telling you to get out of anything. I'm not telling you to get into anything. I don't make trade recommendations. I just give my analysis of how I view things on my end from a technical and fundamental point of view, based on stuff like what you see on the screen here. So anyways, guys, so that's it. Happy trading, be safe, and I'll try to make a follow-up potentially later tonight after the news comes out. And I hope you guys have a good rest of the week. And be sure you like the video, comment, share it, subscribe to the channel if you're just following it for the first time. And that's it. All right, guys. Take it easy, and we'll talk to everybody again very soon. Okay, thanks, guys.